Hey, what's up? This is Dicky here from ForexHabits.com. Today, it is Sunday, the 24th of March, 2013, and we're here just to do a bit of an analysis on some of the US markets, the Euro dollar and the Euro Japanese yen. Now, we're looking at the Nasdaq 100 here. This is a daily chart. And my indicators, MACD, histogram, RSI, slow stochastics, and 3 exponential moving averages: the 21 EMA, the 50 EMA, and the 100 EMA. Now, we've been in a rally mode since November 2012, and there have been the occasional dips, but all in all, it's just been grinding higher. But what we can see here already, which is worrying, is that although we have this ascending kind of grinding uptrend, here on the RSI, we are kind of going down, staying flat, going down, and that is a negative divergence, and that is not a good sign, because usually that means it's going to follow down into the direction of the divergence at some point. So we're going to get a pullback somewhere to 2700, possibly much lower if the top is indeed in. So let's just have a look at the weekly chart, because on the daily chart there's not much to be seen. It's just a lot of chop. It's kind of consolidating and hovering above this 21 EMA, above this 50 EMA. MACD histogram is negative. The RSI is just slightly above 50, so it is kind of in neutral territory. The slow stochastics are just kind of in neutral territory, but barely. So let's change this to a weekly chart and then check what's going on. Let's remove these annotations. Now here, we've just been in a huge upward trend since the crash in 2008, and it's pretty much gone up from like 1,000 to 2,800, but without any real correction. So at the moment, we've never dropped below this 100 EMA on the weekly chart since 2008, and at the moment we're kind of far away from it. We are above the 21 EMA, so all in all, this is still a bullish trend on the weekly chart. It is looking good. The MACD histogram is bullish, the RSI is above 50, is bullish, and the stochastics are bullish. So this is all pointing in a kind of upward direction, but the only thing that's worrying is the fact that we're creating this negative divergence, the same one that I showed you on the daily chart, but on the weekly chart it is much bigger, and it spans all the way from over here. While it's been going up here, we've had this lower high here on the RSI, and currently we are actually above this kind of left shoulder that we have here, but we are way below that point on the RSI. So this is not looking good, and if this is going to follow in the direction of the RSI, we are likely going to head somewhere down there, but there is a possibility to head towards this level of the 2880, which was kind of about over there or somewhere here. There is room for upside, but the room for downside is starting to look like there is a lot of potential for that. Same thing on the Standard & Poor's 500. You can see on the daily chart, this is kind of getting stretched and extended based on just how far away it's getting from its 100 exponential moving average. MACD histogram is barely negative. And here as well on the daily chart, we have this divergence that's been forming. You can see here where we're going higher in price action, but the RSI is going lower. And most of the time in these situations, the price action is going to follow in the direction of the RSI, which is down. So we're going to get a pullback at some stage. While we might go up and test this line again, and the all-time high of 1576, I think it is, or somewhere close to 1600, it might do that. It might give one final kind of exhaustive move, and then it should drop all the way back to at least the 100 exponential moving average. So that's a drop of at least about 100 points, possibly more. If you look in the weekly chart, what's going on with the Standard & Poor's 500, you can see how overstretched it is. We're kind of getting to this point where we're at the same level here, and look how we dropped to all the way below the 100 exponential moving average. So if we're going to drop all the way down to below the 100 exponential moving average, that's about 1300, that's 250 points, and we are so close to this all-time high of 1575. So it's likely that we are going to head towards that, at least touch that, maybe possibly slightly poke above it, and then we should start coming down, and that should happen in the next couple of weeks, according to just based on what I see on the charts. Now on weekly, this is still positive because all the indicators are still in positive territory, but once again we're getting this divergence where we are much higher in price action, but the RSI is not confirming it, and that is a problem. Same thing with the Dow Jones. Now this is a daily chart of the Dow Jones. We still have the same kind of thing. All these divergences are forming in all these markets. It's not just a single market, it's all the US markets, which means that something is brewing, and it's likely that, even have a look here on the weekly chart, what's going on here. Once again, we got this kind of negative thing here, and while it's positive here. So you can see what's going on and how bad it's actually starting to look. And although there is still a bit of upside potential, I mean, this can still go down anywhere. It can still go up a couple 100 points if it has to. But it's looking like a correction is coming in the next couple of weeks. So let's have a look at the Euro US dollar. What's going on here? Daily, we had this big rally from like 120 all the way up to 135, and then we dropped down to about 128 again. Now we've been grinding lower since this point for the last, say, 2 months, and at the moment we're still kind of in negative territory. Now the question is, are we going to get a bounce, and are we going to get a bit of a rebound? Are we going to rally, yes or no? At the moment the charts are not showing that. We're still under this descending trend line on the daily chart. We are under all 3 moving averages. The MACD histogram is pretty much neutral. It looks like it wants to cross over to the upside, but that can be deceptive. The RSI is negative. It's below the 50 line, which is bearish, and so are the slow stochastics. So, and we've also had this cross of the 21 exponential moving average down through the 50 and through the 100, which is usually a negative indication. You can see what happens here. When it crosses to the upside, the trend continues for many more months. So it's likely that the trend will continue for many more months. But once again, the daily time frame is not enough to look. So we're going to look on the weekly time frame and see what we can deduce from that. Now, first thing that we see, once again, the price action is under the descending trend line, which is the same as on the daily. We are under all 3 moving averages on the weekly chart. The MACD histogram is negative. The RSI is under the 50 level, barely, but it's under, so it's negative. And the slow stochastics are negative. So all in all, the chart is pointing for negative kind of price action. Now, even if we do get a bit of a rally, there are many price points that are going to stop it. The first one is going to be about the 50 exponential moving average, which is around 130.50, and then we got the 21 exponential moving average around 131. So even if we do get a rally of maybe 75 pips or 100 and 150 pips, that should be capped to the upside, and after that we should continue down. We should head lower to beneath even this 126 level eventually. Now just look at the monthly time frame that's going on over here. We've had this big drop in the month of February from the all-time high, and at the moment we're under all 3 averages on the monthly chart. Now the MACD histogram is in positive territory, but the RSI is not on the monthly chart, and since we've kind of broken above this, I kind of expect these averages to be the maximum resistance should we get a rally, and I do actually expect next month to continue further down. So at the moment we shouldn't actually get more above 130, 150 should be about the cap to the upside if we do get a rally. So I would personally be looking to go short over there. And lastly, the Euro Japanese yen, which is a different story on its own. It seems to behave totally in its own way, irrespective of markets and currencies. So it's had this huge rally since 2012 from about 94 all the way up to 127, and we have still not had a significant pullback. Yes, we've pulled back to just under 120, 119 I think it was, and we're kind of creating this consolidation over here. Now the question is this a consolidation to shoot up to the upside? Which is very possible, because this Euro Japanese yen has come down all the way from 170 way before 2008 all the way to 94, and now we're only back at 127. If you take a look at the monthly chart, just remove all annotations. Look, we came from all this way from the 170 level, I think it was, just shy of 170, and we dropped all the way to 94 over a period of the last 4 years. Now we've kind of had this suppressed rally kind of consolidation thing, but as I was showing you with the markets with RSI divergences, look what's happening. For many years this continued. We had this divergence where the price action kept on going lower, but the RSI kept on going higher, and eventually we got this massive rally of 94 all the way up to 127, which is huge. So that's the same kind of thing that's brewing in reverse in the American markets. We're grinding higher in price action, but the RSI is going lower, and at some point we're just going to get this massive crash, and I don't think it's very far from occurring. So be sure to check out the website at forexhabits.com/coaching if you want personal coaching, and otherwise just forexhabits.com. Share us with your friends, your family, and whoever you like.